Welcome to the Alan Berry Reports TV show. I'm Alan Berry Labucan. I'm the editor of the Alan Berry Reports and the host of this show. Thank you very much for joining us. One of the key commodities that we follow in the Alan Berry Reports is gold. I've been following gold for past couple decades, and back in the 1990s, you could sort of see a trend developing that looked like it could last for many years. And basically what that was the emergence of India and China as big buyers into the gold market. And this additional buying from these emerging economies was really starting to add up to a significant amount. Now, to put things into context, during most of the 80s and into the 90s, gold had been under pressure for most of those 2 decades. And during that period, the price was under a lot of pressure, and a lot of that had to do with the strength in the American dollar. During the 1990s, the country was running balanced budgets, keeping their national debt from increasing very significantly, and the economy was very strong, and these are all very good reasons for the currency of a country to perform well, as the dollar had done. And gold and the U.S. dollar sort of have an inverse relationship. When the dollar's under pressure, often the price of gold is going up, and conversely, when the dollar is strong, gold is under pressure. And so that was the sort of situation during the 90s. Then we moved into the 2000s, and things sort of changed quite significantly. Now we had, in the United States, they started running record deficits, record debt. The economy slowed down, did not create the kind of jobs that it did during the 1990s, and the national debt grew dramatically. This significant change in the fundamentals put a lot of pressure on the American dollar, and subsequently we saw gold performing quite exceptionally well. And if it was just a dollar play, I wouldn't be overly excited. But like every other commodity, it basically comes down to supply and demand. So with the improved demand from the emerging economies, specifically India and China, they had started to add significantly to the overall trend with demand from the emerging and the developed economies. And so as the economies of China and India have grown stronger and stronger, and there's more people that can afford gold, and they have continuously been consuming gold, and in fact for well over a decade now, the demand for gold has been significantly more than the supply from mining. Now, there's other places that you can get gold from, recycling gold, or what the central bankers had in their treasuries. And so in addition to strength in the American dollar back in the 1990s, you also had strong selling pressure from the central bankers, which put an added pressure, and this is why we saw gold get down to as low as under $270 per ounce. Now, with gold over $1,100 per ounce, things have changed dramatically. You still have that strong demand, but no longer do you have this strong supply from above ground sources like central bankers. They have become less and less sellers all the time, and they're running lower and lower on gold. In fact, you look at a couple developed economies like Canada and the United States that always produce a lot of gold coins. Last year, or in the last couple of years, they had to actually stop taking orders because they didn't have enough gold to produce those gold coins. So these are a lot of reasons why to be bullish, but one of the key reasons is the supply side. And gold was under pressure during the 1980s and 1990s. Less and less money was spent every year on gold exploration and new mine development. This puts long-term pressure on the supply chain. Added to this problem is when you don't spend enough money in the ground each year to replace what you're bringing out of the ground, it started to create a situation where less and less students wanted to learn about geosciences, become geologists, and so it's called in the business the lost generation. These long-term situations are not easily fixed. It's not like you can just start spending money, go back in time, get a lot of new students into the industry, and spend a lot of money on exploration. So these are long-term trends, these supply and demand. So in the short term, when we see sort of gold spike up or get under pressure, we always look back at, are the long-term trends still in place for a bullish scenario for gold? And yes, they are. Another thing that we follow very closely are gold stocks. And the reason I like gold stocks so much, in fact, I prefer gold stocks over gold itself, is because if you're able to determine and differentiate quality from, or the wheat from the chaff, if you will, sometimes you can amplify your returns because you get this added benefit of gold is going up, and so the value of what these gold companies have in the ground is going up quite significantly as well. And so gold stocks are a way to get added performance, and when there's relative strength, as I talked about in some of our last shows, for resource stocks, well then you don't see as bad a pullbacks. When the gold price comes back, gold stocks won't get punished quite as badly, and when the gold price is going up, they'll surge forward. So that's a big reason why we follow gold stocks so closely in gold itself. I'm Canadian, living not very far from Vancouver, and I really can't close this show on gold without saying something about the recently completed Olympics. Being a local boy, it was a tremendously exciting event to have the Olympics here in our hometown. We had some wonderful athletes. 206 athletes from Canada competed. The one that really got things glowing was Alexander Bilodeau, who had a very exciting first gold medal ever won by a Canadian on Canadian soil. And so he got things started, opened a floodgate. We ended up winning 14 gold medals, which is a record for any Olympics by any country. And it was finished off with a win in hockey. And as many people know, hockey is somewhat of a religion in this country. So for us to win that Olympic gold is a real big thing. So congratulations to all of our athletes. Congratulations to all the athletes that competed. Before closing, I'm going to read off the sheet here because I got to put some important information out there. Before closing, I'd like to stress this show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own research and speak with your financial advisors before making any investment decisions. We are always trying to grow our audience. If you'd like to help us, if you look below the screen, you'll see some icons there, and they're called share. And that enables you to send a note out by Twitter, Facebook, or email about the video and how to find it. And we'd really appreciate you making any efforts to get the word out there to any of your friends that you think might be interested in the show. We really appreciate you taking the time to watch this show. We're well aware everybody is busy these days, and we strive to produce a show that saves you time and gives you helpful, high-quality information. As always, we hope you can join us for our future shows or visit our website at allenberryreports.com. Have a great day.